Hello, folks. Welcome to the Weekend Investing Stock Market Weekly Review of 23rd of May. A eventful week where markets were choppy. Did not really, do anything much, but there was almost on a daily basis a change of minor trends in the markets with defense stocks doing very well. And by the end of the week, in fact, post the Friday close, there has been new tariff murmurs of 50% tariff on EU and Apple phones to get 25% more tariff if they're built outside the US. So that can cause some turmoil next week and up till 1st of June, perhaps till when these are applicable. So I think the markets are trying to now also not pay too much heed to these tweets by the US president, because ultimately he backs off and nothing really comes out of it. But let's see where this goes. US matters aside, India is, I think, in a fine position. RBI is giving a load full of dividend to the government, 2.6 lakh crores. That should keep the fiscal deficit very much in line with where we wanted it to be. Oil is near 60, $65. So I think, and most of the results of the Nifty companies are out and they are pretty much in line. So there is not much of dark clouds on the markets. Rather, the fall of the US dollar, your dollar index is now down about at a 3 year low, nearly 99. And I think it is going to go much lower. That's what the intent of the US administration is, to lower the dollar versus other currencies. That once starts to unravel, should, you know, uh, basically cause a lot of flows towards emerging markets, regardless of valuations. So I think that is a flow deluge that at least I would think would come. And second half of this calendar year, perhaps, maybe much better than what most are expecting. These tariff wars, of course, are the sort of red flag in the system if they can disrupt the continuity of things. But other than that, it doesn't seem like any major overhang is there in the Indian market. So let's get going with the charts and see where we are right now. And meanwhile, from our research desk this week, we had all these fantastic stories. I request you to go through them. Some of them can really offer very good insights and may spark some new lights of how and where to invest for you. And our editorial team does a good job in trying to find new topics every week. And this is a available on the app as well as on our blog as well as on the daily newsletter. Please, of course, also read the disclaimer fully and do subscribe to this channel. On the daily basis, you can see Nifty tried to pull back on Friday. Previous 4 days were sort of down days, but we've come a bit far from the recent bottom, and hence some consolidation was needed, and that's what we got. So minus 0.67% this week, and a sort of a week where we did nothing, but that's not too bad given where we are. The S&P 500, in fact, has dropped 2.6% this week, um, uh, but that also is not too far from its all-time highs. So overall, there is a sense that there is likely to be more liquidity that will be in the system now, because we are now at those boundaries of uh, you know uh, the system is bursting at the boundaries in terms of unless more money is now thrown at the market, the yields will go through the roof. So US yields, 30-year yields are at 5%, 10-year yield is at 4.5, 4.6, and a lot of uh, debt has to be rolled over this year, $9 trillion or something like that. So US desperately wants these yields to come down. US wants the US dollar index to come down. The only way it will happen if there is substantial demand for these bonds, and if there is no global demand for these bonds, domestic demand will have to be created, and for that a lot of money printing may have to happen. So maybe the bond market is going to be that center of attention around which everything else will revolve. So equity is not the while equity seems to be the focus for most people, but it is actually the bond market that is going to drive all the decision making. Gold is up massively, 4.35% this week, from 93, 9400 per gram. It has gone now to 9750 or so. And you can see in the chart also, it is a new all-time high close. I don't see any reason to be skeptical of gold right now, given this trend that we have. Yes, we are quite far from where we were just a year and a half back at 53,000, and now we are at 97. But the way things are going, I don't see any reason that the long-term trajectory of gold is getting changed anytime soon. This is the dollar index chart that I was talking about earlier. You can see there has been a comprehensive breakdown of this long-term support. There was a flag pattern last many weeks, which this week has got smashed. And I am expecting next few weeks to be a waterfall event here. That's sort of my guess right now. Benchmark indices overview. Nifty small cap managed a small gain along with Nifty Next 50, and others were slightly down. So really, this week nothing, uh, any big moves have not happened in any of the sections of the market. Within sectors, yes, real estate has moved up 2.7%. Defense has moved up another 1.8%. Capital market has moved up 1.5%. These three have really held a very strong trend in the last some period. You can see here in the last 1 month, defense is up 23.6%, capital market is up 6%, and real estate is up 4.5%. Even over last 1 year, you can see real estate, of course, is down -9, but defense and capital market are up 27.9 and 51% over the last 1 year. So if we come back to the weekly, IT stocks, auto stocks, tourism stocks, oil and gas, and pharma, along with FMCG and commodities. These were the ones that got hit this week, about 1%. There were two sort of set of results. One were poor results in FMCG, and then one were decent results for ITC. And that kind of was a mix up in the FMCG space this week. Other than that, banks have come out with decent results. Autos have been a bit soft, and capital market largely is running on the back of BSC Limited, and of course the resurgence of volumes in the capital market space. Defense, of course, the stocks are going absolutely bananas there, and a lot of folks are very worried about defense stocks. Yes, there will be trends that will be there, and then those trends will go off, and then they may come back on again. But just to ignore that sector because of valuations, well, FMCG has had unrealistic valuations for the last 15 years, yet people have made tons of money in FMCG also. So don't let valuations only keep you away from participating in these stocks. Have a strategy. I mean, you can always get out when the trend is not in your favor. So when we see the sectoral momentum scores, you can see defense is at the top, capital markets, financial services, banks, within banks, private banks also, central public sector enterprise. These are the top sort of average scores across different uh, periods. And very short term basis, you can see real estate has made a very sharp comeback. PSU banks are making a very sharp comeback, and even metals are making a sharp comeback. And oil and gas is slipping, commodities are slipping, and perhaps even infrastructure stocks are slipping. That's sort of these micro trends within this space that we can see. In the weekly advanced decline stats, Nifty had only 26% advances this week. So poor Nifty week from that perspective, whereas Nifty Next 50 had the complete opposite, 74% advances. So even within the large cap space, there is enormous differentiation between Nifty and Nifty Next 50. Mid small and micro cap were somewhere near 40 to 60% kind of gains, and rest of course for losses. But Nifty is a very telling figure there here, where perhaps more FII selling was happening during this week on Nifty stocks. So percentage of stocks outperforming the benchmarks in this last 1 week, Nifty Next 50 seems to be performing the best, as 74% of its stocks is outperforming Nifty Next 50 results. 42% very low on Nifty 50 for this week, and others are near 50 to 60%. If we see on a yearly basis, they're all probably in the same place, where more stocks are underperforming the benchmarks than outperforming, which is not a very healthy sign yet. So while Nifty has recovered to within a stone's throw of all-time highs, the underlying strength of the entire index is not there. just see that 42%, so 4 out of 10 stocks uh, uh, are outperforming and rest are all underperforming. 6 are underperforming. In the market cap segment wise drop from 52-week high also, you can see there is hardly any change. The space for large caps, for Nifty especially, remains in 10 to 30% drop from the top, most of them. Whereas in Nifty Next 50, it is the bulk is near 10 to 40%. In mid cap and small caps, the bulk is again 10 to 40% and even 10 to 50%. So while everything else has recovered in terms of uh, top line numbers of the indices, the you can say the inside of the index is still very hollow. There are, I mean, if just look at mid cap index, for instance, so almost 55% of stocks are still 20 to 40% lower than the 52-week high. That's pretty substantial number of about 50, how much is it? 54%. Small caps also, you can see nearly 50% of stocks are 20 to 40%, and another 20% are actually beyond 40% also. So almost 70% stocks, you can say, are in the deep red of 20 to 50% kind of falls from 52 weeks high. So from 52-week high, certainly a lot of ground to make up, but the index, because it is churning and it is rewarding the non-performing sectors of the past, index has come back, but the broader strength has not come back. Is the trend improving or declining? So we see on 200 DMA, we are seeing some declines in the last many weeks. Since 15th May, we are seeing that the percentage of stocks above the 200 DMA has declined from 58% to 39%. And in the 50-day versus 50-day moving average, also 92% is now down to 79%. So still, the very short term is still not bad, but the longer term trend is still quite pathetic with only 39% stocks above the 200 DMA. In the trend check on sectors, let's check the 200 DMA. Again, you can see the CNX 500, only 39% stocks are above 200 DMA. And the financial and banking space is the best amongst that, although that is also 60 to 65% of stocks only. So this is the best performing in terms of the longer term trends. Real estate, energy, media, pharma, IT, all these are lagging very big, where only 20% stocks are above 200 DMA. On the 50 DMA, however, you can find that autos are doing very well, oil and gas is doing very well, infra is doing very well, commodity is doing very well. So in the very short term, all these sectors have come up. The trend is up, but they have not yet converted into longer term trends. IT in the very short term is still very poor, at only plus 10% here. Pharma also is only 55% here. So these are sort of the dark horse. In case market starts to fall, perhaps they will be lesser impacted than all these other sectors going forward. In terms of the FII DII stats, we've seen some 3 days of selling figures from FII this week. So 19th, 500 crores, 10,000 crores, and 5,000 crores on 22nd were the selling figures. And interestingly, despite Nifty not performing, there has not been such a massive sale also, to the extent of 70% of Nifty stocks losing this week. DIIs, of course, have done fairly well with 1 day of sell and 4 days of advances. So this is all I have for this week's weekly review. Thank you so much for watching, and I'll see you in the next week. Have a great weekend. Bye.